Hello and welcome, dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 5 and we're starting from euro-dollar pair as usual. This trading tips is presented by Petar Jakimowicz. EURUSD has been trading downside this morning, and we found breakout of the key support at the price of 1.0770, which is good sign for the further downside movement. Due to the breakout of the support with a strong momentum, Petar sees potential for the further drop towards lower reference. Downside objective is set at the price of 1.0675. Stochastic oscillator is showing oversold condition, but another bear cross, which is another sign that sellers are in control. Key resistance is set at the price of 1.0805. Let's trade with MACD indicator. GBPUSD presented by Jakub Novak. Data on the UK service and composite PMI lies ahead, and they could lead to a further drop in GBPUSD provided that the reports show a downward revision. This means that market players should be inclined more to short positions, especially in the morning. If sellers do not show activity after they're updating the monthly lows, it may be appropriate to consider long positions. For long positions, buy pound when the quote hits 1.2621 and take profit at the price of 1.2671. Growth will occur amid very good PMI data. However, when buying, ensure that the MACD line is above zero or is starting to rise from it. Pound can also be bought after two consecutive price tests of 1.2570, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.2621 and 1.2671. For short positions, sell pound when the quote hits 1.2570 and take profit at the price of 1.2530. Pressure will increase amid weak statistics. However, when selling, ensure that the MACD line is below zero, or it's starting to drop down from it. Pound can also be sold after two consecutive price tests of 1.2621, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2570 and 1.2530. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1935. Below the 21 SMA, and above the uptrend channel formed since August 17. A slight movement and consolidation are observed. The price of gold is trading sideways due to the Labor Day holiday in the US. We expect that during the American session there will be a technical correction in gold due to overbought conditions, and it could reach the 200 EMA. According to the 4-hour chart, we can see that since August 29, gold has been stuck within an overbought zone, which represents a greater bearish potential. However, we could expect gold to rally only if it trades above the zone of 1928 to 1941, 21 SMA. Then we could expect it to approach 5/8 Muri level, 1953 again. If bullish force prevails, the instrument could overcome this level and reach 1968, 6/8 Muri. Gold is still bullish. It means if it bounces above 1935, or even if a technical bounce occurs around 200 EMA at 1928, it could be seen as an opportunity to resume buying. If this scenario comes true, the metal could reach 1941, 21 SMA and 1953, and will be seen as an opportunity to buy. Conversely, if gold falls and consolidates below 1928, we could expect it to reach 1921, 3/8 Muri level, and 1906, 2/8 Muri. And even the psychological level of 1900. The bullish outlook for gold could be cancelled if it falls below 1930 and 1921. Our trading plan for the next few hours is to buy above 1928 with targets at 1937 and 1953. The uptrend channel is serving as support and we expect gold to resume its bullish cycle from this level. And finally, here's Laurie Bailey with USDJPY pair focused. Let's have a look. Last Friday, on September 1, the price made false move below the MACD line and the support level of 144.73, which resulted in a long lower shadow. On Monday, the price continued to rise above 145.90 and stayed above this level. This morning, USDJPY continues to exhibit an upward movement. The Marlin oscillator does not fully support the price's interest in growth, possibly luring it into a sideways trend above 145.90 support. Nevertheless, the price can still reach the 147.68 target, formed by the embedded line of the global price channel. If the price can surpass this target, the 148.50 target will be in play. On the 4-hour chart, the price has stayed above the balance line, its red line on graphic, and the Marlin oscillator is in the positive territory. An uptrend in the short-term period is a main scenario. That's all for today. See you online soon and good luck.